Welcome to our practical application session. Let's check how to trade our shooting stars. I hope you watched the theory, the lesson number one, all of this based on the lesson one. Let's go into our chart let's check where is our shooting star, right? We will start, of course, with option number one. Okay, option number one is short below. Okay, what we have to do, let's go. Number one is shooting star key takeaways must be met. Let's do this together. Means here, okay, for the first time we'll do this together. Position, where is this shooting star? Okay, we'll check direction, guys. A high, a low, a lower, high, and here we have a shooting star, right? This one. Let's go. It is correct if we find the shooting star in the lower high area. Let's check. Typical occur on the price top. Yes, this is a price top here. And then should be on higher high or the lower high. And we have found our shooting star in the lower high position. That means it's possible for us to trade the impulse, correct? Maybe lower than, or yeah, maybe to a new lower low. It's number one. Let's check number two. That means the wick. The upper wick should be at least 2 times the height of the real body and a little or no lower wick. Let's go into the chart here. And let's check this one together. Snap mode on. Give me a second. 0. Okay, and now this is 1, right? 1 here. Look at this. This is 1 here, the height of the body, and then we need 2 times at least to the upside. Yeah, guys, I don't need the snap mode here, right? Very easily to see. Wait. Okay, here 1. Very easy. You will see. Look at this. We have all of this to the upside, right? It is definitely more than 2 times. And we have a lower wick below, right? We have a wick. It's not super small, but it's fine, right? Depends on the upper wick here. Good. Let's open this one again. Number 3 is our structure. And here the close can be above or below the opening price. Also, the close should be near the open for the real body of the candlestick to remain small. We have a green body, that's fine. Look here, example number 1, and the body is also super close to, or not super close, but it's near, the closest near to the opening, and also low on the, close to the bottom here on the shooting star. So it looks like a real shooting star. Number 4 is sell action. Okay, let's go back into option number 1. Shooting star key takeaways must be met. Boom, done. Everything is aligned. As soon as the shooting star is completed in its respective time frame, we mark the shooting star high and the low. Let's do this together, guys. Snap mode on. The low 4,585 and the high 4,715. Also done. Number 3. The entry short order is set slightly lower than the low to avoid possible fake outs. And that is option number 1. I told you guys, or yeah, it's the same like in the hammer candle or the bullish engulfing, but here for a bearish reversal. It's this trading opportunity. It's very easy, right? We will use an entry line here, color green, and then this is our low, and we will short below. Means here, for example, means our low, the shooting star low is 4,585.75, and you can move your entry, you can set your entry here on a little bit below, right around this area here. That make absolutely sense to avoid. We'd never use this entry here because we want to avoid fake outs. Here, if you move like this, for example, it is $1 around the dollar here, maybe $2, it's also fine. This will be your entry. Means here, look, we created the shooting star, right? It was Friday or Monday, Friday evening or Friday night. We created this the shooting star, and on Monday with the next week we will trade below our low of the shooting star, and we are filled. Let's use also stop. Oops, a stop loss. Second. Here, this is our stop loss. That means your entry is a 4,583.89 and your stop loss is 4,758. That is option number 1, guys. Here, number 4, stop loss is set with the respective distance, for example, plus 33% above the high. That's it. And here, reward is less. Why? Look, we have a huge range. It's a weekly shooting star, right? We have what is it? It is 85 dollars. Oh no, sorry. It is $30, around $130. That's your zone, 4,585 to 4,715. Yes, that's a huge zone maybe for you guys. That means, okay, reward is maybe less because you trade the huge zone, but trigger probability is one of the best, guys, and protection also because your stop loss is above your zone. Let's add also here one indicators. Okay, means here the seasonality. We will cover all the seasonalities here, but first we will start with the seasonality. In option number 2, I will add the COT maybe, and option number 3, I will add the valuation trading day of the month. Good. Seasonality. Let's check the seasonality together. And it is a 2nd of April. Okay, it's 2nd of April, and let's check the seasonality here for the S&P 500. And this is a 5-year seasonality, guys. It is up to you. You can use 3, 4, 5, 6, 7, 10, 20, 30 years, up to you, 16 years, up to you. The key here is backtest. Okay, backtest which time frame works the best, and then you can use this one. Look at this, where we are. This is the current price here. And look, it is not really a selling point, right? It's not really a selling point. The selling point was this one here. Oops. Second, this is better. If we check this one, then the current date is a little bit too late. Means here, this one will be the best, okay, for seasonality. All of this is a selling point. It's fine. But here, it makes not really sense that we will short below, right? We expect not really more weakness, correct? Yes. Good. That means seasonality is not really aligned. Look, again, guys, this is real trading. Of course, I can show you also picture perfect examples, right? I'm looking for this. I will show you the seasonality, COT, trading day, and valuation. Everything is in line. Remember on the first sample, that was a picture perfect sample. But now, this one, trading is never picture perfect, not a 10 of a 10. most of the time, right? Here we have to value to compare and then yes, find the best way to trade. This is not really, yeah, we expect not really more weakness here on the seasonality. Okay, good. Let's go back into let me show you, let me talk a little bit more here. It's more advanced. Only a teaser, okay? I will explain this more in the advanced, yeah, an advanced lesson at the end of all the price action course. Here, the seasonality is strong, right? Remember, we expect more strength for the seasonality on 8 years. Look at this gray line is the seasonality. And why we expect maybe more weakness. Why? First, we got a bearish shooting star at the lower high, okay? Also, we are more like, yeah, we had an uptrend on the left side, right? And then we created more like a downtrend, okay? That means trend continuation. The trend looks more bearish than bullish, correct? That means maybe the seasonality is not correct. Maybe we can expect more weakness. Also, same as also, we're coming from high quality supply to the left, right? And we touch this close to preferred. Means we have an anticipatory downtrend, right? We are looking for a lower low. We created in the lower high and shooting star. We have supply here. We broke also the trend on the left because it was a significant pivot, right? The last higher low. And we broke this one. Look at this. Means maybe the seasonality is not correct, right? Maybe we will create a new trend. Okay, it's only a teaser how to read this one. I will explain this a little bit at the advanced lesson at the end of the price action course. But end of the day, guys, you need trading experience, right? Maybe you need also a mentor. That's always my recommendation. Talk with a mentor. This is the best. If you don't want, then yeah, you need trading experience, trading hours and hours and hours, thousands of trading hours. Good, that's it. To option number one, we covered also the seasonality. Good, we are done with this one. Let's go to option number two and how to trade this one. Shooting star key takeaways must be met. Done. It's the same shooting star. As soon as the shooting star is completed in its respective time frame, we mark the shooting star high and the low. Done also. And now action number two is short within the range. The entry or short order can be made market or as set within entire range of the shooting star. Stop loss is set with the respective distance, for example, 33% plus above the high. Okay. Let's check how we gonna trade this one. Okay, it is the same sample, guys. Okay, so we created, we have a lower high in the shooting star, guys, and the idea is to short within the range. Means maybe the zone, right? Option number one, short below, is too big for you. Then you can choose. You can set an entry. You can set an entry. For example, you want to short within the entire range, the shooting star around 50%, right? Up to you. Fine. If you want to, you will decrease your zone at 50%. Perfect. This will be your entry. If we come back, look, shooting star, next week, we hit the 50% mark. You can also say, okay, our Sysology numbers, 4,650, up to you. You can say, okay, I will sell the S&P 500 super high to increase my profit margin to the moon, up to you. Can say, okay, here only a little bit close to the opening. Okay, from the shooting star, I want to be short. Fine, up to you. Not wrong. You can set this short, right? or you can go market. If, for example, if you're waiting for a market order, then you can wait, for example, a seasonality point here. Wait for a seasonality point, for example. Oh, the best selling point is in 3 weeks. That's nice, right? For example, your seasonality is in 3 weeks, means okay, first week, second week, third week. Okay, oops. This is the third week candle. Means okay, wait, where we are in the third week. Oh wow, we hit this one again, short here. Also possible, never right or wrong. Let's go. Let's talk about the trading day of the months here. That's maybe really nice. Okay, we will cover the trading day of the months here. Let's change for this the time frame, because it's a trading day, not a trading week. I will go to first. I will mark this one, and then I will go to daily, of course. So. And this is our shooting star candle on the weekly. And look, this is the 1st of April. Okay, it's the 1st of April, means also our first trading day. And our short would be option number 1. Our short is below the 4,585, right? Or maybe in the entire range here, for example, around 50%, okay? But now let's use the information for our trading day of the month. And here, bearish trading days. At best, a cluster of several days to stay in the trade. And look at this. Quality is not the best, I know, but I think it's fine here for this sample. Wait. Only need this one here. Yes. Okay, great. That means this is here the trading day, right? The assets, the trading day, and here the months, April, but 5 years, 10 years, and 15 years. Oops. And let's check together, right? Again, the shooting star is the second trading day. It was this area here. Okay, means the second trading day is bearish here on the 5 years. Great, but then bullish, bearish, bullish, bullish. Maybe not. It's not really a cluster of bearish of bearish days, right? Let's check the 10 years here. The fourth. If we check this one here, look, it's also not really clear, right? More like the 8. The 8 trading day is bearish. Okay, means okay on the 10 years, maybe on the 8 trading day. Let's check where is our 8 trading day. Means 1, 2, 3, 4, 5, 6, 7, 8. This is the 8, the trading day number 8. Okay, means okay, you can use, let me remove this one again. You can wait also for this trading day to expect more weakness, but then yeah, you have a really bad entry, right? If you move the stop loss above. Let's check the 15 years, and the 15 years we see look, the trading day number 4, we have a cluster of 1, 2, 3 bearish days. 1 day is bullish, maybe a correction, and then 3 more days bearish. And look here, a cluster of more bearish days on the 5 and 10 years. Maybe this makes sense, right? Let's check the trading day number 4. 1, 2, 3, 4. This is a trading day number 4, and we expect first the previous days are bullish, and then it's maybe 3 days bearish, then correction, more days bearish, and then a cluster of bearish days. And here, this makes sense, right? Perfect. The the number 4, 1, 2, 3, 4. Yes, the trading day number 4 is bearish, and then bearish here, correction 2 days, and then more weakness and more weakness. Means you can use option number 1. You can use option number 1 for your entry. Look where we are, right? Look where we are. We know, okay, trading number 4 is a great short opportunity. Look where we are. We are in the shooting star, right? And the weekly shooting star here. Look where we are. For example, you can wait for a close. Fine. Then your short is here. It's better than option 1. Or you can check also, okay, it's trading number 4. We move super high in the day, right? At the beginning, wow, we are super high. I'm so deep into my zone, my whole weekly shooting star. I'm very deep. Let me sell here market, right? It's more like, yeah, we are higher than we are above the 50% line of the shooting star. Okay, means yes, nice. I can decrease my zones. Yeah, that's possible to increase my zone. Perfect means okay, maybe a short here, right? At the opening, right? The opening is also really nice, or the highs here. Market up to you, but here you can see how to use trading day of the month, okay, for your short opportunity. I think this made sense for you. Again, let me open this one. Yeah, then trading day number 4 is bearish. Look, 1, 2, 3, 4, 5, 6, 7. From 7 days, 6 of it are super bearish. And then look at this, the end of the month are super bearish here. And guys, it is not a secret, right? Let me show you, for example, an entry with the trading day of the month. That will be okay. This will be your opening as your entry, and we will choose a stop loss above. Upsala. 1 second. Above the weekly shooting star, right? It's the same. This is the line of the shooting star. Then this is your zone, your filled, and look, what do you have? Your profit margin, guys. Remember, I told you, right? Back to weekly. It is maybe we're coming from weekly supply. We create in the lower high a shooting star. We broke the uptrend to the left. Means we will create maybe a new lower low, and look how that means you can expect that you will break this low here, and look, your profit margin is crazy, right? With this option number 2 within the entire range, right? And also with the combination with the trading day of the month. Super crazy, right? Yes, that's it. Option number 3, okay? Let me add Uppsala. Yes, it's fine. Okay. Good. That's option number 2. Great. I hope you understood, guys. Now let's cover our option number 3. Option number 3, guys. Shooting star key takeaways must be met. Yes, it's the same shooting star. As soon as the shooting star is completed in its respective time frame, we mark the shooting star high and the low. Done. And now, time for action, guys. Short within a lower time frame zone. Always a little bit tricky for you, I know. But it's not different for the process like zone refinement, right? It's a shooting star could be also it looks like a supply area, and then start with a zone refinement. Okay, number 3, the entry or your short order can be made market or a set within entire lower time frame supply zone of the shooting star. let's go together into the chart. And yeah, this is our shooting star here, right? And let's check how to trade this. Low and the high, and let's check the different lower time frames. I will go to daily, and look, I have not really supply here in this oh wait, do this a little bit better for you. This is still, this will be still the shootings, weekly shooting star range, okay? And then let's check together, and in the candle here I have nothing, right? In the range I have no high quality supply in the daily. Okay, means let's go lower, maybe to 40 minutes, right? I know most of you guys like the 240-minute shooting star time frame, sorry. It's here above. We have on the 240. Yes, 240 for me, it's nothing here. Maybe for here for me, I miss leg in, right? Where's my leg in candle? It's not clear. Means also not a nice time frame. Let's go into the 180 minutes. All right, and here it's not right or wrong. Follow your process, guys. Maybe you'll move to go to 120, 145 to 60 to 15. Up to you. Never right, never wrong. So let's check this one together. Let's check. This is the whole area here, and where is my supply, right? And if I check my supply, oh, this looks very nice, right? I have a clear like in candle here. This one. And then indecisive, yes, it's a little bit ugly, right? And then I have my first clear leg out. This candle here, and multiple red candles means it's a real drop. Okay, it's okay. This could be my zone here, right? With a wider version, or maybe, and that's what I will do because the wider version is already tested, right? Drops, and then we come back with the green candles. I will move my entry on a preferred version like this or this. It's up to you guys. You have more than enough trading experience. I would choose this one here. That means this could be my entry, right? I will green. No, not green. It is yellow. Means this is my preferred version. And look, my preferred version, my lower time frame zone, is a part of the whole weekly shooting star, right? This is the high of the weekly shooting star. This is the low of the weekly shooting star. And it is a part of the whole weekly shooting star. The entry is a little bit lower, yes, perfect, okay, or not perfect, okay, it is what it is, right? But I'm covered, right? My imbalance, my institutional unfilled selling orders are a part of the whole entire weekly shooting star. And then look at this, guys. This would be my zone. Price comes back, a retest of the monthly shooting star, right? We hit also the monthly shooting star low, and a test of our preferred version, a fresh preferred version, lower time frame supply zone, right? And we filled more unfilled selling orders here. There was here, and then look at this. Boom. Let me go to a daily time frame. Then it's easier to see what happened then. Look at this. This was our zone with a stop loss above our lower time frame zone. That's possible, guys, right? That's possible. We have a lower time frame stop loss protection. It's a little tricky because possible that you stopped out, right? Or the protect. We can use also the protection for yeah, above the whole weekly shooting star. But here with option number 3 and also lower time frame stop loss, you increase your profit margin. And remember, guys, our first profit margin is definitely a new lower low against the seasonality. Yes, I know. And look, your profit margin is, I don't know, 1, 2, 3, 4, 5, 20. 25, 30 hours. Of course, if you move your stop loss above the shooting star, also possible. This make not really sense, right? Here, this make not really sense. Yes, it make not really sense because you increase your zone because the entry is lower than the low of the shooting star. Good. That's it. Here also, guys, let me finish the indicators. Here you can use also the idea, or not the idea, the trading day of the month, guys, right? Remember, we expected on the trading day number 4 weakness. Trading day number 4 was this one here, right? This red candle. That was not really a line, or it is a line that's working nicely on option number 2. Option number 3, not really, because we created never supply, right? That was our first supply. Means, okay, let's check trading day number 8. Maybe it's also a cluster, right, on the 5 years and also on the 10 years. What is it? Trading day number 8. Yes, number 8 means 1, 2, 3, 4, 5, 6, 7, 8. This is number 8, means it's our leg out. Not really, guys. Make not sense because we created our zone, right? Let's check. Maybe we can choose another one. The next big cluster is trading day number 13. Okay, trading day number 13. It's a big cluster on the 5 and 10, and 2 days on the 15. But let's check our the trading day number 13. Maybe it's working nicely. I never backtested this for this sample here. Means 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. And this is 13. Remember on this one, 13. No, it's not, make not really sense here for 13. But yeah, you have to, here's the key for me is I expect a cluster of bearish days. Means for me, we are supply and demand traders. I will never short any trades without supply, for example. Means here, this is the beginning of the cluster, okay, of the trading days cluster, the bearish trading days cluster. Means I have supply above, I will wait. Okay, I can wait. Maybe I will move higher and then look at this. I will drop more and more and more. Good. Let's cover also the other seasonality, the COT and the valuation. Let's check the valuation as a COT here. For this, we will go back to the weekly chart, of course. And let me add the COT. And here's only the I put only the commercials inside. You can change if you want, right? If you need also the other parts. Here we expect weakness, or we expect weakness here. And look, the S&P 500, the commercials are still bullish, also in the extremes, right? That means we are trading against the seasonality and against the COT. Ooh, crazy, right? And then the last one is our back to daily. Upsala. Yes, we hit the valuation here. Of course, the best of the best, guys, for the COT is also that the commercials are bearish or in the extreme bearish area. Okay, that's nothing new for you. Let's go into the valuation, and here we have the for example the Japanese yen and the US dollar inside. Okay, Japanese yen and the US dollar, and look, Japanese yen and the US dollar was here around in the equilibrium. Also not helpful here. It's your job, guys. Check the treasuries, check the check gold, check silver, check platinum, anything what makes sense. Okay, backtest makes sense. Okay, then okay, choose this one. It's your job. Yes, that's it. I covered all the seasonalities, and now let me make a summary. Summary means, let me remove this one. Look, and this is trading, maybe helpful for you. What we have, left side, an uptrend. Then we create a, oh no, it's too fresh. I can't, it's not allowed for me to explain. Good. And then look what we create, uptrend, and then we broke the uptrend, right? We broke the uptrend. That was our last higher low. We broke the uptrend. Means we'll start to count the trend from the beginning. Means a high, a low, a lower high. Oh, great. It's anticipatory downtrend, right? Then we create a shooting star. Oh, great. It's a bearish reversal. It is a shooting star on the lower high. Oh, great. It's the best of the best. I need it, right? Or that's the only way I can trade this. Great. We are coming from this high quality supply here. Oh, great, super bearish. I have no high quality demand below, means, okay, possible that it will drop more and more and more. Okay, this means everything is super bearish, right? And then I will go to another one, seasonality. Yes, it's bearish, but then super bullish, means seasonality is against me. Means, and then the valuation is, yeah, more like equilibrium. I don't know, it's not good, not bad. The CUT is against me. It is bullish, not bearish. The trading days, oh great, on the trading day number 4, it's a beginning of a bearish cluster, and then more at the end of the month. I have no demand here, means possible that I can trade this. I can stay in this trade, right, and trade all the cluster of the bearish trading days. That is trading, guys, right? I think that's the same like you make your analyze at home alone, and yeah, you'll check this one, and then you have pros and cons always, or not always. Sometimes everything is in line. Yes, I know, but other trades, you have pros and cons, and then you have to make a decision. That's it. I hope this was helpful for you. Hope you understood now also the shooting star and how to trade this option number 1, 2, and 3. You have the key structures from the shooting star, you have the key structures for the indicators, and this practical application. Don't forget to download your notes, and yeah,